This is SFNet Presents In the Know, sponsored by Hilco Global.
Hello, and thanks for joining me today on In the Know. My name is Jennifer Palmer, and I am the president of the Secured Finance Network. In the Know is SFNet's thought-provoking podcast, the brainchild of Barry Bobrow, which he started back in 22. These are a series of conversations with compelling thought leaders and experts on important topics impacting the finance industry and the secured lending market, all to keep you in the know. I'm honored to be filling in for Barry for the next few episodes. Because these are such big shoes to fill, there was only one person I thought worthy of helping me kick off my tenure, and that's Katie Lemire. Katie has extensive financial services, regulatory, and enforcement expertise. She most recently served as the Executive Deputy Superintendent at the State Department of the Financial Services, overseeing the Consumer Protection and Financial Enforcement Division. She's also served as a federal prosecutor in the Southern District of New York and as a prosecutor in the Manhattan DA's office. She has extensive monitor experience, leadership experience over investigative teams. Now that I've provided just some of the highlights of Katie's illustrious career, I think we are out of time. Katie, thanks for joining us today. It's truly an honor. Obviously, based on your experience, there's a lot that we can talk about today, a lot that would be of interest to our members and our constituents. But today we're going to talk about cryptocurrency and the regulations, or the lack thereof, I should say, surrounding crypto. You've been at the forefront of this industry since the beginning, since its inception, basically. Can you tell us a little bit of how your background relates to crypto?
Yeah, and thanks again, Jen, for having me. You're going to Katie me, and I'm going to Jen you, because that's how I know you. And you said this is like having lunch, so that's what I'm going to act like. In fact, I'm getting hungry. But moving onward, so I think that the easy starting point about crypto and me is to pick up in my last government job. And as Jen said, that was in the New York State Department of Financial Services, where I oversaw consumer protection and enforcement. And just a little bit about, I'm going to call it DFS because it's way too many syllables, that agency. So I'm going to call it DFS. And I'm just going to talk a little bit generally about what DFS does. I know some listeners, for better, for worse, know what DFS is and have had hopefully not too much interaction with DFS. There are probably some listeners who have no idea, especially those in other states. So just a bit about DFS. So DFS is the primary financial services regulator in the state of New York. So what does that mean? So what DFS regulates is, for example, all banks with the New York State Charter. So what this largely includes in the end is a lot of foreign banks and local banks. DFS also regulates other financial service companies, including mortgage servicers, debt collectors, licensed lenders, most relevant probably to this crowd, and also relevant for today, cryptocurrency businesses. And as Jen said, I oversaw consumer protection and financial enforcement. And in overseeing enforcement, that means that I oversaw every single enforcement action, including regulatory violations, by any entity that DFS regulated, including any enforcement actions involving cryptocurrency businesses doing business in the state of New York. So just to get from A to B, let me backtrack a little bit. Like I said, I oversaw consumer protection as well. And what that meant was I oversaw the group of people who received consumer complaints. And I would keep a bit of an eyeball on those because that's sort of the real canary in the coal mine, the bellwether of where we should be putting our regulatory enforcement chops. And at DFS in New York, as you can imagine, it's a big state, and we received thousands of complaints every year, and from all walks of life, related to all the businesses that we regulated. And among those thousands of consumer complaints, I started to see a sharp uptick in complaints against cryptocurrency businesses. So I started at DFS in 2019. On the one hand, it's not that long ago. On the other hand, in crypto land, that's eons ago. And like I said, I saw an uptick in complaints. And just for example, if you took 2020 to 2021, complaints against crypto businesses grew 8 eightfold. That's a lot. No other business was jumping up like that in terms of complaints. And the complaints we heard are those you can imagine, some that you'd hear about, from many other businesses, and some were unique to crypto. So for example, we heard consumers telling us, if I've got a problem, there's no phone number to call. If there is a phone number, no one answers the phone number. People would tell us my account is frozen for no reason and I cannot access funds, and there's no phone number to call. Other people complained to us that they got no responses, to email complaints, etc. People complained, and again, this is crypto specific, I'm sure you've read about this, that they got locked out of their digital assets, their wallets, because they did not protect their password, they lost it, or a bad guy got it and hacked their way into their crypto account. Again, that's what we call a wallet. And by the way, I realize we've got a hugely varied audience here. I'm not going to bring this down to the lowest denominator. I'm going to try to find a middle ground. That's one thing. And the other thing I'm going to tell you is that when I started at DFS, we referred to the crypto business as virtual currency. In fact, crypto was thought to be a bad word. Crypto was sort of the diminutive word you gave to the industry. Oh, crypto, geez, no controls, that kind of thing. It changed. And now the vernacular is crypto. Everyone says crypto. The Wall Street Journal says crypto. Crypto is the word. So I'm going to say it. So it is not intended to be pejorative. It's really the way people speak these days. So just going back for a moment to DFS, again, you've got these skyrocketing complaints. The volume is just growing geometrically. And you've got people complaining about things very specific to crypto. Another thing that we're hearing is people are calling us and complaining they lost money. Well, for God's sakes, it's crypto. What do you think? But they don't know. They're putting money in thinking that they are putting money into FDIC insured institutions, and they were not. And they expected their losses to be covered. So given all of this, and I'm not even going to start to get into stable coins. People thought stable coins were stable and they lost money and they complained to us about that. So the bottom line is I thought it was high time perhaps to start looking from an enforcement perspective at the crypto industry. And that is what I started to do, Jen. I think that went way beyond the scope of your question, but that's your answer.
I think it's great. And since you took a minute to talk about the terminology of crypto, can you just maybe help our audience understand, is there a difference between crypto and digital assets? Because that is out there as well.
Not really.
Thank you. Perfect.
Not really. I will tell you, every state, I'm a lawyer, I was an enforcement attorney, so I tend to talk law, and I'm sure you've got lawyers on this podcast, but some not. In the law, it's sort of the difference between symphony and orchestra. In other words, none, really. Some will insist there's a real difference. Not so much. Different states write differently about what these things are. Within the DFS regulatory lingo, it's virtual currency. That's actually the lingo of the law there, but it varies a lot.
Perfect. Thank you. Like you said, we have a wide audience, so appreciate you bringing it down just a bit. So listen, before we move on and we talk more about your experience at DFS and all of the enforcement efforts that you led, I just want to pull the lens back a bit. Let's set the stage. What is a government and what are the regulators doing to enforce crypto or help enforce crypto?
Yeah, so it's boy, that's a question you could write a book about. I'm going to keep it short. It's fascinating for some people, probably boring as all get out to others. So once again, I'll find the middle road here and try to make it interesting. So because you have so many people in finance and lending on this call, I'm gonna frame it a bit in terms of anti-money laundering laws. So I'm gonna go back in time a little bit and talk about the history of AML in the United States and how that has been shoehorned onto the crypto industry. And when we're talking regulation within crypto, that's one of the big pieces we're talking about is AML. So going back in time, for decades now, the federal government has required financial institutions to play a role in preventing money laundering and terrorist financing and other crime. And so laws were passed over time. They were beefed up over time. For example, after 9/11, the Patriot Act. Before that, the Bank Secrecy Act. There are others. But laws were passed over time requiring financial institutions to, for example, file reports of cash transactions above a particular threshold. Tends to be $10,000. There are variations of that, but around $10,000. Laws were passed also requiring financial institutions to report suspicious activity, also to assess risks associated with particular customers, and to put in place an anti-money laundering program, right? To have a system so onboarding customers are assessed for risk. They're assessed to make sure they're not terrorists, and also continuing obligations to assess the risks associated with customers' accounts, what is a high risk account, monitoring transactions, etc. And again, I'm simplifying. And over time, federal and state regulators have extended these requirements onto the crypto industry. And frankly, this has led to confusion and a lot of extra work. And I'm sure this is something that the audience here is familiar with, giving overlapping jurisdictions and differing requirements. And by the way, I just want to put an aside here that, my background, Jen talked about largely in terms of government. But even before my present position as a partner at a big law firm helping private sector clients, before that I did run my own firm. I had clients. I was in the private sector, and I know a common complaint about a place like DFS and other state regulators is that they have their own requirements. And if you are a firm that does business across 50 states, frankly across 3, boy, do you have headaches because you're dealing with differing requirements. And I understand that, and I have sympathy for that. I cannot apologize for an entire agency, especially since I am no longer there. But I just want to say that I am cognizant of those issues, and those issues extend into crypto. So what has happened over time is that a patchwork has been constructed among state and federal regulators with regard to the crypto industry, just like it has with regard to, your industries. And it has caused headaches, like I said, and confusion. And I think I've said that 3 times now. I'm hoping everybody will like me a little better now, even though I worked at DFS.
Well, let me just clarify that this apology goes directly out to the professionals in California and New York, especially in New York, who are just feeling the changes in law. But thank you, Katie. I think the 3rd time it really came through. Appreciate it.
Okay. All right. Thank you very much. Yeah. So going back to crypto and what happened there. So FinCEN, the Financial Crimes Enforcement Network, which is a federal agency, it lives within the Department of Treasury, led the way with crypto. And back in 2013, this is a lifetime ago in crypto land, they declared that administrators or exchangers of virtual currency qualified as money services businesses. What's the shorthand of that? The crypto industry was to be regulated by FinCEN. Okay. And so what did that mean right away? It meant that crypto businesses, and again, I'm using shorthand there, it's not every crypto business, it's the exchanges of the world, like Coinbase, for example, Robinhood. It meant those businesses were to put in place AML programs. And then I'm not going to go through every agency, but it just started to spread among federal agencies, among state agencies. And fast forward in time, and now you've got, just in 2020, Congress passing the Anti-Money Laundering Act of 2020, which made explicit that businesses that exchange or transmit crypto qualified as regulated entities for purposes of the AML laws. By the way, just as an aside, if you've ever recorded a podcast or if you've been involved in one, two things. Number one, they're never on video. So I actually usually look a lot better. But Jennifer Palmer did not tell me this one would be on video. So there's that, number one. And number two, we are blessed with the ability in recording podcasts to do retakes. And I can pause and say, let me try that again. I will tell you, I've not done a single retake yet, and everyone here should be very, very impressed by that. Okay, so going onward. So since all of this has been going on, and in 2020, and the feds extend officially, even though it already was extended, AML laws to crypto, other things are going on, some of which has been in the news quite a lot. I'm sure you've heard, for example, all the saber rattling coming out of the SEC. Gary Gensler, who is Biden's pick to run the SEC, he warned in April 2022, not even a year ago, that regulatory loopholes in the crypto markets could undermine 90 years of securities law. You can see he does not have a soft spot in his heart for the crypto industry, and he likened the crypto industry to the Wild West. So you can see his attitude towards SEC, and more of that has come out, especially since the collapses of Cred, Celsius, Voyager, FTX, etc. So the SEC has focused more and more on crypto. There have been some very high profile settlements. Likewise, the CFTC has done the same, and other federal agencies as well have state agencies. Bringing this back to New York State, where of course I have a bias because, hey, that's where I am and that's where I worked. But truly, DFS, New York State, led the way in crypto regulation among the states. And in 2015, which was still very, very early days for the crypto industry, DFS enacted the BIT license regulation requiring crypto businesses to have robust AML programs in place. And along with that, there have been several enforcement actions that I initiated. We'll talk about that in a bit. And but we are still left with a lack of uniformity among the states with respect to crypto, as is the case with license lending, et cetera. Apologies again, that's number 4. This is what's been going on. And most recently, for example, Florida passed legislation to roll back the AML controls it previously imposed on the crypto industry. So not only is it a hodgepodge, but it's a hodgepodge across the spectrum. Some states more vigorous on the regulatory front, like New York, some less so, like Florida. Back to you, Jen.
So basically what you're saying is it's a global effort. We've got the U.S. government here locally trying to tackle it, as well as the states individually and collectively. And if I asked you who's in control, who's actually regulating this, it sounds like we just have a lot of cooks in the kitchen.
Everybody.
Yeah, everyone's trying. And they're clashing.
And they're clashing, yes.
Yeah. And what can you just tell us what drove Florida's decision to roll back the efforts?
I think it was a few things. I think Miami, and disclaimer, the mayor of Miami is of counsel to my firm, Quinn Emanuel. Miami has become a very pro-crypto jurisdiction, and the mayor and his administration have really sought to promote crypto within the city, within Florida. And I think it's just part of an overall political dynamic right now in Florida, the idea of making crypto a friendly home in Miami. So again, this is just me just thinking and wondering, and that the political dynamics play a big role there, I think.
Turning back to overseeing the enforcement of crypto back at NYDFS, you must have seen a lot. So can you provide our listeners with 1 or 2 examples of, I don't know, maybe your most interesting or shocking investigations?
Yeah, so I will tell you, all of my crypto investigations were shocking. Really. So you know, the rule is, of course, I cannot say things that are confidential. I can't talk to you about details that are not public. So what I'm going to do is talk briefly about 2 investigations that did become public, Robinhood and Coinbase. And I'm going to riff off of what is on the public record. If anybody actually has some interest in this area, Both consent orders for Robinhood and Coinbase are on the DFS website. So if you're interested, Google, for example, Robinhood DFS, you'll find the consent order. And so in any case, in both of these instances, there are a lot of parallels. So I'm going to talk more about one and just tell you how there are a lot of parallels in the second one. But Robinhood, and I'm just going to assume people know what Robinhood is. Is that a safe assumption, Jen?
I think it is. Yep.
So Robinhood, as part of its business, has a crypto platform where customers of the other parts of Robinhood's trading platform can trade, exchange, store, etc., crypto, and that's the piece that we looked at. And the settlement, I'll jump to the end, the settlement resulted in a $30 million penalty. Given the kinds of bank settlements we've seen at DFS, in the scheme of things, this was not so very big. If you've followed DFS news over the last 10 or 12 years, over $1 billion in fines were levied upon BNP Paribas, almost $1 billion to Credit Suisse. But in any case, 30 million, not terrible, but it was one of the first big it was certainly the first crypto enforcement settlement Robinhood was for DFS. So in any case, the enforcement action, the settlement encompassed three different fronts. You could guess what they are already, given what I've talked about: AML violations, consumer protection violations, and cybersecurity violations. And just one brief aside right there. DFS, some of you may know, has a cybersecurity regulation in place. It's really for the state of New York, but it's DFS that implements it. And the cybersecurity regulation basically says to small, medium, and large businesses, different requirements based on how big you are, the kinds of cybersecurity protections that you have to have in place. So in any case, Robinhood's had some violations there as well. So I'm just going to tick off more for prurient value than anything else. Some of the more shocking findings we had, again, these are in the consent order, on the anti-money laundering front. And for Robinhood, this was the biggest bucket of problem stuff that we saw. So for starters, Robinhood was guilty of, faulted for, fitting into the pattern that we saw among so many crypto businesses. Growing rapidly, rapid growth with zero, maybe a tiny compliance function in place. And as the business exploded in revenue, there was no keeping up on the compliance front. So, for example, one of the requirements of a robust anti-money laundering program is that there's a transaction monitoring program in place. In other words, just like it sounds, their transactions are monitored. Mm-hmm. And, as of late 2019, Robinhood was averaging over 100,000 transactions a day. Makes sense. They had a very popular app. Many transactions washing through the app and through Robinhood generally. And imagine if you were a bank and you had, as banks do, over 100,000 transactions a day. Do you think a regulator would find it acceptable to have manual monitoring in place for 100,000 transactions a day? No, but that's what Robinhood had. They were manually monitoring that kind of volume. I mean, do the math, how many transactions a year, kind of nuts. And they eventually did stand up only as time went on, as we were looking at them, did they stand up an automated system, but even then it wasn't in place till April of 2021. And among those, the manual transaction monitoring that was going on, in any such system, you've got trigger alerts. For example, if someone deposits $10,000 a day in cash 5 days in a row, typically an alert will go off. Could be a sign of money laundering, something not good going on. The alerts that were set up, again, this is in the consent order, were not triggered unless the cumulative transactions over a 6-month period amounted to $250,000.
Okay.
Not acceptable among regulators. One of the other obligations under a robust AML program is to be reporting suspicious activity. And that reporting is embodied in a document called a suspicious activity report. And so banks like Bank of America, Citibank, you name it, will be filing many, 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 many suspicious activity reports on a daily basis. Mm-hmm. Robinhood, for the entire year of 2019, filed two.
Wow.
Two.
Wow.
So, and so you can imagine low staffing on the compliance front, et cetera. So that's AML. That's all I'll say on that front. With regard to cybersecurity, again, they didn't have the basics in place. There was not in-house staff dedicated to cybersecurity. There were some very high-profile hacks. Some listeners may remember that got media coverage with customers losing money. And just they did not have the system in lockdown, which if you think about it, if you know anything about crypto, it's a very high risk, fluid environment. It's not like someone has to walk in with a handgun into a bank and say, give me your money. They can hack their way into wallets and just start taking money and running. So cybersecurity issues there. And lastly, just consumer protection. Like I said, there was no phone number to call. People couldn't call. And, some of you may remember the very high profile incident reported about a year and a half ago about a college student who looked at the app, and the app mistakenly displayed that he was out, I think it was like $200,000, and he jumped off a bridge and killed himself. And, maybe if he had a phone number to call, see if that was right, that could have saved a life. So I know that's sort of a dramatic way of putting it, but these real people, real things. So I'll just talk a little bit about Coinbase. Coinbase was another investigation that I initiated. The settlement came out, I believe it was about a month ago. Similar issues, AML, lack of AML controls, cybersecurity, I think consumer protection as well. I'll leave it at that.
Well, I appreciate you humanizing the issues, Katie. When you're just looking at it across the headlines, it's easy to forget that, these risks are really affecting real people. So thank you for that. And there was a lot of lessons learned that you shared, a lot that's happened, certainly in crypto since you got involved, but I think probably no bigger year than 2022. A lot of people say you could write a book about the year. It was a roller coaster. It's, a lot of intense moments, massive valuation drops, and shocking fraud. And so where does crypto stand today from a reputation standpoint, and where do we go in 2023? What are some of your predictions for the year?
I certainly think that crypto regulation is on the uptick. If you just Google crypto in Congress, you'll see a lot of proposed bills that have come out in the last 6 months, all prompted especially by some of the notorious bankruptcy filings that we've seen in the last 6 months. Some of those I did or am working on, so I won't single them out specifically, but we all know what I'm talking about. So I think we're going to see an uptick in regulation, and that regulation, unfortunately, I think will continue in a multi-pronged way. I think you're going to have state regulators jumping on board more. You're going to have different federal agencies, trying to grab some of the piece of the regulatory pie. And, again, the headaches of having to do with multiple jurisdictions, even a single jurisdiction with multiple regulators, as is the federal government, I think that's all going to worsen for a bit before it gets better. There has been talk in the past of a central bank issued, a Fed issued digital currency. My prediction is that's quite a ways off. I think the Federal Reserve is a very thoughtful, learned place, and they are not going to just jump in feet first into something as important and thorny and inviting of comment as issuing a national digital currency. I think it will come over time, but we're not here yet. And they are going to take their time, not because they're just deliberately slow or lazy, but because they are thoughtful and they want to do it the right way, right out of the gate. So that is a ways away. That's a not next year kind of prediction. That's a down the road prediction. But I think the kinds of areas, as you can guess, given what I just spoke about, where you will especially see an uptick in regulatory work in Congress is the AML compliance. AML compliance, as well as just safeguards for consumers so that people are not quite literally losing the shirts off their backs when some of these institutions go under.
Yeah. Well, you touched on the implementation of a CBCD, and that's something our industry will certainly be keeping a close eye on as it'll affect most of our member base. But in closing, there's a lot that we could talk about. We spent a lot of time with crypto today, and you have so much more experience than just crypto. Obviously, our member base has a tremendous amount of lenders who are taking a high risk, lending to companies and directly affecting human beings, getting back to that topic. So just wondering, do you have any words of advice or any suggestions that could help some of our lenders detect fraud and help them not lose money?
This is one of those instances where I wish we were all in person, because literally my response to that question would have been to turn to the audience and ask people to raise their hands and give me their thoughts. So I am not so arrogant and presumptuous to think that I could lecture this crowd on how they could protect their money better. I mean, you guys know your industry 1,000 times better than I ever will. But I was thinking back, Jen, there was one point you invited me to speak to some members of your industry on cybersecurity.
Mm-hmm.
And I gave sort of my basic primer on cybersecurity. What are the basic things you should be doing? And I think it's worth coming back to that again, because it's the basics that get flubbed up. I could speak to you about due diligence and preventing fraud in your industry, but again, you all know that stuff. You know that stuff, and you read up on that, and that's your home court, your home turf. I'm just going to say a few things about cybersecurity, and one of my purviews at DFS was overseeing all the reports of cybersecurity violations. So in other words, if you're licensed by DFS, you know this. If you're licensed by DFS, you have to report to DFS if you've been breached, if you've had a major breach. And I had a team that read all of those reports, and we would speak once a week. I would hear the summary of what's going on. And I got to tell you, it is the simple stuff over and over and over again that gets everybody in trouble. The really simple stuff. So I'm going to talk about 2 or 3 things.
Yeah.
If you remember anything from
I
this
remember.
podcast.
I changed I remember from our last meeting. After that, I think I changed my password from password 123 to something a little bit more difficult. So thank you. But I can't wait to hear your 3 words of advice for today.
Yeah, well, thanks for saying that. I thought that was so obvious. I wasn't even going to repeat that, but I guess it is. I guess it is.
I mean,
repeating.
maybe, I think that was back in 2015. So hopefully, others like myself have come a long way since then.
I will tell you, I will not name which place I've worked at, but one place where I have worked within the last 5 years, there was a survey done of everyone's passwords, and password 123, I would say 25% of the workplace had that password.
I mean, it's shocking, but accurate.
And then there was summer 2022, they would name it like, because you had to change quarterly. So that, that's another one. Winter 2018, there's that. Or birth dates.
Yeah.
So, change passwords. So the other huge thing I would say of almost every single cyber breach that we saw at DFS, I would say 90% of the victim companies did not have multi-factor authentication in place. And DFS requires it if you're a DFS licensee, but who cares about whether you're a licensee? You should absolutely have multi-factor authentication in place. I'm sure 90% of the audience knows what that is. So just speak to the 10% for a moment. So for example, if you have an account with Chase Bank, Chase requires you to have a setup such that when you log on from a new computer, it wants to send a text to your phone that you have to punch the code in from the text into your computer to make sure it's really you. That's all multi-factor is. And
I can't even buy my kids a bagel at lunch without, the 2-step process. So yep. I hope that 100% of the audience knows it.
I hope so too.
Yeah.
But I will tell you over and over and over again, the breaches involved a lack of multi-factor authentication over and over again. So if you don't have it, please.
Good advice. Yeah.
Number two is, again, it's a real basic. Some of you are
Yeah.
going to roll your eyes, but I'm telling you, your overall Wi-Fi password. So if you take one day, like walk around, if you're actually going to work in an office, stroll the halls, turn on your Wi-Fi detector, and if you work in a place where there are other companies around, look at the names of their Wi-Fi.
Mm.
People will have, let's say it's, call it, I don't know,
Well, let's
Amy's Lending.
SFNet. Or yeah. Yeah.
Amy's Lending. Let's say it's Amy's Lending. If you walk down the hall, you'll see Amy's Lending Wi-Fi.
Right.
And boy, does that help the bad guys,
Yeah.
start to hack, and they're like, let's target that one. Then they jump on the website. Then they figure out who to target. And then they see people's bios. People put email addresses, understandably, on their Wi-Fi.
Yeah.
And they're like halfway in already.
Yeah.
It used
The door.
to be a big problem with hospitals where bad guys would walk in the emergency room with a laptop and just start pulling stuff off the server.
Wow.
So number one, don't name it after a company.
Mm-hmm.
Number two, have a password in place.
Yeah.
We've seen Amy's Lending places that didn't even have they did not have a password on their
Or
Wi-Fi.
had their phone number. Yep.
That's all I'm to say.
Well, I think that's
just
great
do those
advice.
two things.
Yeah.
Just do those.
I think don't open the door. Keep it locked. I think that's great advice.
Yes.
Well,
Yes.
Katie, we've talked about your extensive career and how much the industry has changed in just a very short period of time. So I think it would be great to have you back, as this industry is going to continue to evolve, and we'd love to have your perspective on it. So thanks for joining us today, and I can't wait till our next conversation.
Thank you. Thank you for having me.
This is SFNet Presents In the Know, sponsored by Hilco Global.